Hey everyone, and welcome to today's episode of Love America, Hate Taxes podcast. I'm Ryan, this is Don, and we have a topic that's probably going to ruffle some feathers. So it's an interesting time of the year. So Don, it's today's tax day, actually. So a lot of people are experiencing some unusual pain, or maybe usual pain, which it shouldn't be usual. But the thing we're going to cover today is a CPA myth. A lot of people think that their CPA is doing tax planning for them. And we're actually going to kind of debunk that myth that they're actually not.
Yeah, so great topic to have today on April the 15th, because I'm sure a lot of people who are watching this here, if you're not watching it live, you're watching it recorded, and you're probably a little recovering from a little pain called taxes. And unfortunately, this happens once a year, and everybody endures it if they're a taxpayer. But the reality is, Ryan, when I had my CPA firm about 8 years ago, we were in the same category. We weren't really giving a lot of tax advice because we were very busy making sure that our clients were compliant, which is ultimately making sure the T's are crossed and I's are dotted. And what I recognized, again, about 10 years ago, was what the greatest need was. Not necessarily tax preparation, even though it's extremely important. I mean, you need to make sure that you keep Uncle Sam out of your business, well, out of your tax return. And by doing things properly, that's less likely for them to get involved. But what was needed is tax planning. But most CPAs don't do that. But what you, like you said earlier, a lot of people I speak to on a routine basis assume that their CPA is going to do that. But the reality is only about 10% of CPAs, accountants, professionals in the country actually do proactive tax planning.
Yeah, that's a great point. So why don't we walk through just a couple things that you've seen that CPAs normally do that some people think because they do this, they're doing tax planning. So, like a common one is maybe expensing everything out. Kind of walk us through some of those common things that, again, CPAs might be doing that seem like tax planning, but they actually really aren't.
Yeah, I just had this conversation with someone here about a week or so ago, and they said, at the end of the year, my CPA normally calls me and says, "Hey, you got some money you need to spend." And so when I think about that, Ryan, spending money just to create a deduction, unless you need it. Now, if you
Mhm.
need it, it's a whole different conversation, but just to spend things to spend, that's not really good tax planning. Like going and buying a vehicle. Hey, if you need a vehicle for your business, great. If you need a vehicle, throughout the year, terrific. But the reality is just to create an expense for an expense. Now, there are some things you can, beg your pardon, there are some things that, you need to keep in mind that prepaying some expenses. So, for example, you could prepay your rent for the next year. That would be something like, for example, you had a big windfall of money coming in. Certainly, that's some things, but I don't generally hear that from CPAs. Generally, here's what you owe, here's your next quarterly payment that's going to be due, and that's pretty much the tax planning.
Got you. So they're just kind of like, for the most part, they're kind of like history takers, just checking boxes,
We
things
call them
that
recording the history.
recording
Exactly.
history as far as that goes. Okay. So all right, let's kind of go into this then. So that's not really tax planning. That's just kind of the surface level things that you can do. So what are some real tax planning things that you would implement in a tax plan that they may not do?
Sure. And just to come to defense of CPAs and accountants out there, that extremely busy. Matter of fact, we get a lot of referrals from CPAs because they really don't have the time to spend digging deep into. There's 75,000 pages in the
Mm.
tax code. So that's a lot to get through, and it changes, which we'll talk about that in another session here. But, things such as making sure that if you're set up as an S corporation, making sure that you're taking reasonable compensation, not overtaking. And it's interesting. I had this conversation with an accountant here probably about a month ago with a client that was taking, I believe it was about $250,000 in W-2 income,
Mm.
and he was only taking about 100,000 in net income or a K-1. It should have been just the opposite. And unfortunately, because he was doing it the way he was doing it, he overpaid on Social Security or FICA taxes. And so at 15.3%, that can add up pretty quickly.
Yes.
But that's just one example. You could do the Augusta rule. You probably see a lot of that on TikTok and Facebook and YouTube and everything else. That's where you get to, if you own a business, you can use your home as a rental up to 14 days a year.
Hmm.
So for example, for us, I come into my home, we have a leadership meeting, and then I bill the business for that time spent. Now, it has to be market rate. So I always tell my clients, go out there, contact some hotels, some country clubs, something like that around your area. find out what it takes to utilize their location there for 3 or 4 hours, if that's what your typical meeting is. And then make sure you document, because with anything with the IRS, if you're going to do tax planning or a tax strategy, documentation is a key. Because I was actually speaking in California on Friday, and I asked anybody in there if they ever gone through an audit before. And the guy raised his hand. I said, was it pleasant? He said, absolutely. I said, and what you found out is if you cannot document or provide the documentation to justify that deduction or that strategy, they're going to disallow it.
Mm.
And when they disallow it, then there's going to be penalties and interest on top of that too. So it's just making sure, or hiring your kids. If you have kids still at home, had one yesterday that came into my office, a younger couple in their 30s, just had their first baby, but they're from another country, and they provide financial support to their parents who live here in the States.
Yeah.
And so we could actually create an opportunity for them to put their parents on payroll,
Wow.
have a job description, make sure everything's documented properly. They put their parents on payroll. Another thing, last thing I just mentioned is like an accountable plan.
Mhm.
Accountable plans. So if you're, doing type of, if you're S corporation, if you're reimbursing employees for expenses, maybe that's travel or whatever the case is, an accountable plan is keeping compliant, making sure that you have everything properly documented, and you got to make sure that's put in place as well. But most importantly, as we talk a lot about here, matter of fact, our team's in there finishing up 2021's research and development.
Yep. Tax credits.
Yep.
Yep.
So, RD tax credits overlooked a lot of times by business owners. I mean,
Mhm.
we work a lot in the medical professionals and some other businesses, and they don't recognize that they qualify. We did an interview
Mhm.
yesterday about that gentleman, Jeffrey.
Yes.
Yeah.
Yeah.
And what was he saying about his industry?
He was saying well, he was just saying that it could use R&D, but they don't know about it.
Yeah.
The majority of people don't take advantage of it because they don't know how to begin, how to start. Once again, their CPAs just don't know how to lead them into that.
Yeah.
So,
Well,
yeah.
and what kind of business was that?
Oh,
Describe
dental labs.
dental
Yeah,
labs.
dental labs.
Yeah, dentists, dental labs, things like that. And so what happens is it's just lack of knowledge.
Yes.
And
Yep.
unfortunately, who loses out on that? But the good thing about research and development credits, even though someone hasn't taken advantage of it historically, there's an opportunity, if it makes sense, to go back 3 years and get a refund back.
Yeah, that's awesome. Yeah, I know we see that a lot in our business. And again, it's not to discount anything that the CPAs are doing, right? I mean, they have their specialty. Tax planners have their specialty. Like you would not go to somebody who works on jet engines and ask them to perform brain surgery. Like you just, completely different. They understand type the same stuff, but still, it's just like two different it's apples and oranges. And so, just make sure that you find the specialist that can help you with that tax plan because there's some red tape there too.
Yeah,
So,
and you know what? You wanna see a track record.
mm,
Unfortunately, we just, well, I said unfortunately, we had a conversation with a client this morning, from the Northeast who had started working with this firm out of Arizona. Long story short, it's been a debacle, a whole mess. Made a lot of promises and plans for them to reduce taxes, and nothing really happened, actually, it cost them more. I would definitely get some actual factual historical information, maybe some referrals. We just had a client, an attorney out in California. We did our annual review with her yesterday. Last year alone, we saved over
oh
$700,000
my
in
gosh,
taxes.
that's awesome. So let me ask you another question. So this is another common question is like, what's the what's the amount of activity that one like a business owner would need to do for tax planning? Is it a yearly thing? Is it something that they want to revisit every single year? Is it something that they can set up one time and be done with it? Kind of walk us through what you typically tell your clients.
Yeah, so tax planning, generally when we come in, you're having to go in there and rebuild the foundation is what
Mm,
we call it. So we do foundational appointments, but generally when we come in, we do an assessment. You need to have somewhere in the vicinity of probably about 75,000 up in tax liability for it to
mhm,
make sense to do a tax plan. Now, listen, if you're paying less than that, certainly there's some basic things you can do, and there's some folks out there that could probably help you do that, but generally, the folks that we work with are gonna have to be about 75,000 or greater in
mhm,
tax liability between, state and federal. Number 1. Number 2 is just making sure that, when you put together the plan, know if it's a one and done. There are some things, Ryan, that we do, and some strategies, I've had clients, and I tell them every year, we'll review and see if it makes sense to renew our relationship because I mean, there's some things you can put in place that are going to be recurring each and every year, and there's
mhm.
not much else you can do because maybe their income hasn't changed any. it just keeps on being consistent, then there's no point in re-engaging.
Yeah.
So,
I'm sure for a lot of people, like, to know that you could probably set it up one time, and then a lot of it is kind of reoccurring is nice, I mean, to know, and the big changes you can still get help on, but still, it's just, that's kinda nice. So, less of a workload there.
yep,
Well, good. Yeah. So, I mean, that's a pretty awesome distinction because I think a lot of people do get confused, just like like we were saying at the beginning of the podcast. Exactly, what is my CPA doing? They're doing things that they don't know exactly what they're doing, but it might be tax planning. They're not really sure that type of stuff. And so, a lot of CPAs that we know in the past that work with us, they love working with us because we kind of actually help them out with their client getting the benefit. But there's a lot of CPAs that might feel like they might be threatened
mm,
from, another tax planning firm coming in because there's a couple things, and this CPAs tend to, in the business world, have some of the longest relationships with their clients out of anybody. You've got somebody that's been in business for 25 years, they have the same CPA for 25 years. So when you bring them a tax plan that shows them that you can save them 40% to that CPA, it may look like that, it may look bad to that CPA that, why haven't you been doing this for the last 25 years? And then there's a lot of animosity can be created. So,
yeah, and then that's one thing when we have a conversation, the first thing we tell them is, Quartermaster Tax Management powered by your CPA, because we really prefer you stay with your CPA. Now, if you're not happy with them, certainly there's some, other options out there, but the reality is, when I go into a relationship with someone, there's 4 things that I tell them about a CPA. Number 1, they're very busy, and so the reality is they don't have the time to spend the time, the hours that myself and my team spend, researching and making sure everything is, put in place necessary to save the taxes. That's number 1. Number 2, the CPA doesn't wanna lose their compliance business, their tax preparation, their bookkeeping,
mhm,
payroll. We don't do that here, so that's not a threat. Number 3, they don't want us to throw them under the bus, and
mhm,
and I have never done that. Even though there's some bad CPAs out there, I would never throw a CPA under the bus. I may, bring out some points in my conversation. Actually, one of them sent me an email today saying, "Hey, let's have a chat about our mutual client." And we have a very respectful relationship. And so, Bill and I are going to have a conversation about some things that this client is doing uh, that we suggest they make a change.
mhm,
And so it's about a respect. And then lastly, audit. They don't want to be audited.
mhm.
And so we actually have a guarantee in our documentation that if anything that we recommend is challenged, then we'll defend it at no cost. And the good news, Ryan, we've not had that happen. So, and we really don't want anybody to be on a radar. So we're very calculated and make sure that everything we recommend to a client we can defend without any risk of losing.
Oh, that's awesome. But yeah, I think we answered a lot of questions here just around like what is tax planning? Is my CPA possibly doing it? Hey, if anybody has any questions, if they're CPA, you need a second opinion, a second review, we'd be happy to take a look at that. I know again we talked about maybe around $70,000 in tax liability or more for us to do that. But if you have that, we'd love to have that conversation. But any other closing?
No, I mean, we have a great team of tax attorneys, CPAs, enrolled agents that, are very knowledgeable in this space here. So, it's Ryan, I look at it this way here. If I went to a doctor and I had this something going on with me that wasn't good, I was having some health issues and stuff, and I kept on going to the same doctor and he wasn't helping me or she wasn't helping me, we'd go get a second opinion. You know, it's the same thing when it comes to taxes. You don't know what you don't know. And the reality is every year, there's millions and millions of dollars that are hundreds of millions of dollars that are overspent in taxes because they just don't have a plan. And there's an old saying is people don't plan to fail, they just fail to plan. And that's part of what we do is we put together a written tax plan for them so they know what the journey is going to look like. And some things are going to move the needle a little bit, and then there's some strategies that are going to move the needle quite a bit, like the one I just referred to.
Absolutely, and I'll add one more note too that, with every presidential change, there's always big changes for the most part, and it may not be today that it changes, but it can be enacted, a little bit down the line, and so those are constantly changing all the time, and so to think that what you were doing at one time worked, but never have it reevaluated, you probably should, because things change and you might be leaving a lot of money on the table,
That's a
so.
very good point. Yeah, and we're in a new presidential a new president right now, and so because of that, there's legislation that's being worked on right now, which we'll talk about in another episode. But it's going to change. there might be some tweaks here and tweaks there. We did a whole series on this last month about all the things that are being proposed. Some of them pretty extreme, and then other things, not so much. But we don't know until after the legislation is signed off by President Trump, and then we'll be able to know how it's going to impact our clients. So,
Yeah, well, that's interesting. Definitely something to stay tuned for.
yeah,
So,
absolutely.
well, perfect. Guys, thank you so much for joining us for today's episode. If you like today's content, just like and share it. Share it with a friend, share it with another business owner. And if you have suggestions or questions, please submit those as well so we can get those on another podcast and hopefully get those answered for you. Until we see you again. Thanks, guys.
Thank you.